everyone, welcome to EduTap. So in today's session, we are going to discuss a very important news article of finance that is about the monetary policy decisions. So the bi-monthly monetary policy review has been done in April 2022 and this is the first bi-monthly policy review for the financial year 2022-23. And many important decisions has been taken in this bi-monthly policy review, especially regarding the SDF. So this becomes very important for you all to understand, and in today's session we will discuss all about the decisions. Okay, so now before starting with the session, please subscribe to our YouTube channel if you are new to the channel and join our Telegram channel for the PDF of this session, and you can get the link of the Telegram channel in the description box below. So now starting with the RBI has restored the LAF corridor and introduces SDF as flow. So first of all, what was the situation that happened after which the bi-monthly policy review was conducted? Okay, so bi-monthly policy review is conducted after every 2 months. So it was conducted on February last, and then now it has been conducted on April. So what was the conditions of the economy when the review was taking place? So the geopolitical tensions, you must all know about that there is geopolitical tensions that are revolving worldwide in the globe, and there was tensions of the Russia-Ukraine, and due to which there is supply chain disruptions that is happening. Okay, due to the supply chain disruptions, the input cost has gone up, the crude oil prices are very high, and it is expected that due to this the inflation will keep on rising because there is supply chain disruptions and the inflation will keep on growing. Especially if we saw the inflation of the February 2022, that is of 2 months before only, the inflation was at 6.07%, the retail inflation. The CPI inflation was at 6.07%, and as you must know that 2 to 6% is the target of the RBI, that RBI do not want the inflation to go above 6%, and still it went above 6% in February 2022, that is 6.07%, and in January it was 6.01%. So in January also it was higher than the 6% level. The WPI also rose from 12 point something percent to 13.11% in the February 2022. So the inflation was rising too much in the economy, and as you can see that it was higher than the upper limit that the RBI set. So after that, when the monetary policy review happened, the expectations was that the RBI must do something to control the inflation, because it is the responsibility of RBI to seek growth and control inflation. So in the past few bi-monthly policies, the growth was the main target, and the growth, why? Because the pandemic happened and the growth had to be pushed so that the economy can revive from that such a huge problem. And so in the previous bi-monthly policies, growth was the main motive, we can say, and due to which the repo rate was lowered and it was kept at a low rate. Okay, so now the inflation must be the main target. Okay, why? Because it has breached the upper limit of the RBI. But still the decisions that RBI took, that is the repo rate still was capped at 4%. The reverse repo rate was still kept at 3.35%. And the bank rate and MSF, that is the Martian Standing Facility, was still capped at 4.25%, and the stance was still the accommodative stance. That is, in this bi-monthly policy, the rates were not changed. So why RBI has done that? When the rates are kept low, or it is maintained low, when the growth is seeked, and if the RBI is keeping the rates low, then what will happen, that more money will go into the economy, and more money will go into the economy, more loans will the banks will take on the repo rate, and more loans the banks will give to the people, due to which the growth will happen. But what will happen, that growth will happen and the demand is high, and due to the high demand, what will happen, that the inflation will rise. So we need the growth, but inflation should also be controlled. So the stance was kept accommodative, but there was the outlook that was there. The outlook said that the monetary policy document chose to prioritize inflation over growth in its outlook statement, that going forward what we will do, that we will change this accommodative stance. We will try to do something for inflation. We will prioritize the inflation and not the growth for now. in the previous policy documents wherein the commentary on growth preceded inflation. So in the previous bi-monthly policies, in the previous outlook statements, the priority was the growth, but in this outlook statement the priority is inflation. So how the inflation will be controlled in the economy? So that for that the RBI has introduced the SDF, that is standing deposit facility. So this is not for the first time that SDF has come as a term. The idea of an SDF was first introduced in the Urjit Patel Monetary Policy Committee report in 2014. Okay, so the SDF facility is the facility through which the excess liquidity that is in the system, that is in the economy, can be taken out by the RBI. So for first thing that we must know that excess liquidity is taken out through the VRRR recently. Recently the RBI has tried so much to take out the excess liquidity in the economy. VRRR is what? Usually students are confused between reverse repo rate and variable reverse repo rate. So reverse repo rate has two things, the fixed reverse repo rate and variable reverse repo rate. Variable reverse repo rate means variable, that the rate is changing, okay, as per the market conditions, and on this the RBI is taking the deposits. The RBI is taking the deposits from the banks, and RBI is giving the government securities as collateral to the banks, because in the reverse repo rate what is happening, the RBI is giving the government securities to the banks and taking the deposits. So through the variable reverse repo rate the RBI was trying to take out the excess liquidity. So now SDF facility has been brought to absorb the excess liquidity, and here why it is special, why are we not continuing with the VRRR? Because the government securities are needed as collateral here, but in the SDF it is collateral free facility of SDF that strengthens the operating framework of the monetary policy. Here the RBI will not need to give the collaterals to the banks. Okay, so you will say that okay, RBI, it is beneficial for the RBI because RBI will not need to give the collaterals to the banks. But how is it beneficial for the banks? Why will they take the SDF when the collateral is not there? Okay, so SDF they will take because the rate of SDF is higher. The interest rate is higher in the SDF, that is for the deposits that the banks are giving to the RBI, the banks will get higher interest rate, because in the fixed reverse repo rate we can say that the rate is 3.35%, and the variable reverse repo rate happens sometimes only, and it has a limit also. The RBI sets the limit also. Okay, so here in the SDR the repo rate is the reverse repo rate is lower than the SDR. So it is a win-win situation for both the banks as well as the RBI. RBI will not need to give the collaterals or give the government securities to the banks, and the banks will get the fixed rate on which they are depositing their money with the RBI. Okay, so the RBI, in continuation of its approach towards liquidity management, so through this excess liquidity will be taken out of the economy. Okay, and liquidity management and normalization of LAF corridor will also happen. The SDF is currently introduced at 3.75%. So this is all about SDF. What SDF is, it is a tool to absorb the excess liquidity from the economy. The RBI will take deposits from the banks and will not give the collateral to the banks, will not give the government securities to the banks. The rate is higher than the fixed reverse repo rate. Okay, so now benefits of SDR. See what happens, that the fixed reverse repo rate was at the lower, it was at the lower end of the LAF corridor, the fixed reverse repo rate. Then there was repo rate. Repo rate is the rate at which the banks are taking the loans from the RBI. Then there was MSF, that is the loan that is taken in the emergency situation. So of course MSF should be the highest, that emergency situation loans are taken. The RR is lower than the MSF, that is loans that are taken in the normal conditions. Then is the deposit, that the RBI is giving the rate at the banks are giving the deposit to the RBI, and the rate the RBI is giving for the deposits, it is the lowest. So now it has been said that, see, if this fixed reverse repo rate was 3.35%, then reverse repo was 4% and MSF is 4.25%. Now there is no symmetry in this corridor. That is, here the difference is 0.65% and here the symmetry is percentage is the difference is 0.25%. So the total difference was 0.9, the 90 basis point we can say. So there was no symmetry in this LAF corridor through which we can gauge that what will happen in the future. So it has been said that it has been decided by the Reserve Bank to restore the width of the liquidity adjustment facility corridor to 50 basis point, the position that prevailed before the pandemic. So the symmetry is needed in this LAF corridor. Symmetry is needed. So symmetry is what? That is, here the difference should be same as here. That is why the SDF has been introduced as the floor of the LAF corridor. Here the SDF will be now, and here the repo rate will be, and the MSF will be at the higher end. Okay, so SDF is 3.75%, RR is 4%, and the MSF is 4.25%. So you can see the difference is 0.25%. The difference is 0.25%. So here is the symmetry. The width is known now. That is, the width of the liquidity adjustment facility has been restored and the corridor is 50. The difference is 50 basis point only. So you can see that the symmetry has been brought back, and the symmetry has been brought as well as in the lower end, and at the upper end the standing facilities are there. That is, marginal standing facility and the standing deposit facilities are there. Now these standing facilities are important because they are at the discretion of the banks. The banks, whenever the banks want, whenever they are in the emergency situation, whenever the banks want to deposit their money, they can deposit it because it is available for all the days of the week and including even the weekends or the holidays. So it is available to the banks for all days or in the week and for the whole year, and this is at the discretion of the banks. Because see what happens, that in the VRRR the limit is chosen by the RBI. But in the SDR or MSF, what happens that the banks can, in the VRRR the dates are also chosen by the RBI. But in the SDF and MSF the banks can take the money, the banks can deposit the money whenever they want. Okay, so this is available. The MSF and SDF will be available on all days of the week throughout the year. That's why the standing facilities has been brought in the lower end also, in the floor also, because the standing facility is in the upper end. Okay, so it has brought the symmetry in the corridor. Now we know that in the lower end, in the upper end, both are the standing facilities, and the difference will be 50 basis point only in the whole of the corridor. So this symmetry has been brought by the RBI. So I hope you have understood about this, and the expectations has been revised. The growth expectations has been revised to 7.2%. Before it was 7.8%. Okay, for the year, for the financial year 2022-23. So the growth expectations has been lowered by the RBI, by the Monetary Policy Committee, as well as the inflation expectations has been higher. That is, inflation expectation is it was before 4.5%. Now it has been raised to 5.7%. So the inflation expectation has risen of the Monetary Policy Committee of the RBI also. So the inflation expectations has been risen and the growth expectations has been lowered. So this is all about the reverse repo and everything. I hope you have understood about the SDF and why it has been brought. It has become the floor of the LAF corridor, that you must remember. And now this is the question. I hope you can easily answer this now, as well as this is the question. And so thank you very much. These are the people that gave the right answer of the previous session question. It was Vamse, Yash, Mansi, Sonali, Arvind, Divya, Nilesh, Sojanya, Singh and Mahesh. So thank you very much. If you have any query, you can mail us here or you can contact us through this number. Thank you.